Welcome back, everybody. Today is November 19th. We'll be taking a look at the last week and a half of my M1 Finance Recession Ready portfolio. Sorry for the delay in the video. Just had a really busy weekend, but trying to get back on track here for you guys. If you like this show, please subscribe to it, give it a thumbs up, leave a comment below. Only takes 2 seconds, really does help out the channel. So before we get into the portfolio, I did want to just share with you a video here that just so I'm not going crazy, that there are other people that are seeing this, so I want to share that with you right now.
China and the U.S. had, quote, constructive discussions about phase one trade deal, according to the state media. And we see this on both sides. In fact, all the time. They have to do this because this propaganda allows the markets to go higher. That's in the U.S., that's in China, but also globally, because if they are not seeing eye to eye, then of course we have these tensions that continue to escalate and we have big problems. We experienced that for quite some time. Now what we are seeing is this constant, every week, or sometimes more than every week, information coming out from either side, and chances are both sides, talking about how constructive the trade talks have been. Now, we can't even agree to the fact that there will be $50 billion of an agricultural deal to be signed. They are always talking about some issue that's coming up, but don't worry, we're going to sign it. It's going to happen any day now. They pushed back the meetings, they pushed back everything, in fact, and at this point, we don't have any real information. I did a post about this on my community or blog section just recently, if you haven't seen it, essentially stating that even CNBC and the Wall Street Journal are starting to see through this, but of course that will be pushed to the very back of the news. Nothing to see here. Northman Trader had.
So that's what I just wanted to share. I'm not going crazy. Markets at all-time high. All governments are printing money faster than ever just to keep this market propped up as high as possible. The market's at all-time highs. My portfolio is very near all-time highs. Whatever I had lost about 2 weeks ago, I've pretty much gained it all back. If I look at just the past week, almost 2%, all of it's pretty much back. We broke 2,500 barrier as well, so that's a nice jump for me there. But this trade thing is not going anywhere anytime soon. I saw another video. I just spent the last half an hour trying to find that information again, and I could not. But it basically was a timeline of when the trade war started, and every week for the past 6 months, what the trade war headlines were, and how it just goes on to talk about how everything is positive, it's happening soon, it's happening soon. It's now been 6 months, nothing is happening, and at this point, we're going to be lucky to say, you know what, can we just not do a trade deal? Let's just go back to what we had agreed to prior, and let's just kick this can down the road at this point, because Trump doesn't have enough time in office to really lean on the Chinese government at this point. And the Chinese government, frankly, just doesn't care about their people. So I don't know how either side wins at this point, other than just backpedaling and saying, you know what, let's just table this until next year, and let's just go back to the trade agreement we have. And I think that would even be a win for everybody at this point. But other than that, I don't really see an end to this. With that being said, I'm going to take a look at the past week. We had a ton of dividends come in on the 15th here. Again, a ton of pennies coming through. Again, it's not a very big portfolio, but it's very diversified, and everything, is at least 2 cents to 25 cents, and these come in anywhere between once a month, every 3 months, whatever it may be. We had a couple more buys coming in, and that's everything there. A lot of dividends coming in, very happy. If we take a look at the all-time dividends now, up over $24, I feel like the last time I looked at my earned dividends, I was at maybe $10 or $14. So it's really starting to ramp up here. If I look at just the last month alone, that's $6 there. In the past week, $1 right there in dividends. And we're starting to get enough base of money in here where it's really starting to ramp up. If you are new to this channel, I'll kind of briefly go through. You'll see we're back in the green across the board for all of these particular slices. I am weighted 45% bonds. I've got 30% in REITs or real estate investment trusts. Dividend aristocrats, I have 50 plus stocks that are all top dividend payers for the past 25 years. They are comprised, I just bought them maybe in the past month or so. And then my tips portion is just treasury funds. These are effectively just cash. I am holding 10% of my portfolio in cash, waiting for a recession to happen. And when it does, we'll be moving all the money out of treasuries. We'll be moving it into a combination of bonds and real estate. And then we'll also be dipping money out from bonds into dividends and real estate as well, depending on what has tanked the most. For instance, the last portfolio, we had the .com bubble was mostly a stock crash. The previous recession we had was based off of the mortgage-backed securities that affected real estate more often. So I'm weighted a little heavily more in real estate. I don't think that's going to be the issue this go round. I think it's more or less going to be stocks, and just overall market ETFs are going to be a little overfunded. So we will see when that happens. We'll be moving money out accordingly. So stay tuned if things do hit the fan. It's very possible. We have seen a lot of news this week. Companies are starting to miss earnings. They're starting to miss their expectations. They are cutting future outlooks. So this very well could be the start of, technically we are already in a recession. By definition, it's 2 consecutive quarters with slowing growth. We are already in that. So if this is finally starting to catch up to everybody's balance sheets, it might be the time where you're going to see people starting to get laid off, and the market could really start pulling back. On top of the trade war, the longer that's going on, it's really going to hurt a lot of the tech industry, because a lot of our stuff does get assembled and manufactured in China. One big company, Cisco, huge tech company, does a lot of network switching. That's kind of their claim to fame. Well, a lot of that stuff is made in China. It's also stolen from China, and then they make knockoff switches that have the identical code in it. But now, with the trade war getting on, they're having trouble sourcing components and equipment for them, which, they do keep a stockpile of it. But the longer this goes on, the longer these companies are going to have pretty much uncertain futures, depending on which way this whole trade thing goes. Right now, it's just going nowhere. It's going nowhere fast, and everybody and their uncle is saying, it'll be fine, it'll be fine. It's kind of like that one photo, I wish I had it ready for you, where it's like a comic where the dog is sitting at the kitchen table drinking coffee and the entire house is on fire around him, and he says, everything's fine, there's nothing wrong. So I kind of feel like that's the point we're getting to with the current market. All-time highs, companies are starting to not meet earnings, they're starting to cut future earnings, and yet everything is still, ripping forward. So some way, somehow, people just have too much money on hand that they're just throwing in investments everywhere. So I'm trying to align myself to, yes, I will take a hit, but I'll monitor where I'm taking that hit, and then I'll have some money set aside to go ahead and buy the dip once it really gets here. So the best and worst performing over the past week, the prior week, 2 weeks ago now, real estate took a nice dip. It jumped down 4%. My previous video, I said to anyone who does watch my video, rather than unsubscribing, buy this little pullback in real estate. And what did it do? This is a week and a half later, it's already back up 3%. And just in that time, let's see, what's my biggest pullback was NRZ. Everything else went up majorly. So I did recommend buying at that time. So if you did watch my videos and you did buy Please leave a comment below, because you're sitting pretty. You bought right at the right time to get a nice little padded jump right away. Also, if you did take my advice before when to buy into the stocks, if you look at the all-time dividends, I'm up 4% in stocks. I just picked and switched into these maybe a month ago. If you look at my previous videos, you can get an exact timing when I did make that change, but I'm very happy I did. I've got a nice little buffer here, and I've been very happy with the way the portfolio is performing. We are now officially 6 months in. So 6 months, weighted return. If I had invested the full $2,500 in this particular portfolio in 6 months, I'd be up 6%, which would be a lot more than just $80, but I'm very happy with the way everything is going. 2/3 of it is market gains, and the other third is dividends. Dividends will be ramping up in the months to come. I also have some extra money. I'm going to wait probably till I get all my holiday shopping done, and then if I do have any extra money, I'm going to be throwing a couple extra $100 into the account. I might put like a cash hold on it, and then just wait for a little dip, and then start feeding this money in. I'm never going to stop my daily contribution of $12. It's just if I happen to work a side job, I just got to check for about $4.50. That's something that I could technically throw right in here, but I don't like buying a chunk of $4.50 all at once. That's something that I might just say, all right, out of that $4.50, let's phase that in. Let's do like $110 a week, and just kind of phase that in on top of my normal contribution. So look forward to that for upcoming videos coming shortly. I have not changed anything. I haven't added or removed anything. I haven't changed any of my holdings. We're just letting it automatically fund every day and just buy whatever has dipped down. So again, when that real estate did crash down that 4% 2 weeks ago, my auto investments were buying back heavily into real estate. So it was able to quote unquote buy the dip, and now it's back up, over $20, over 4% here. And I'm very happy with the way this M1 Finance works with its purchasing. Also, some other changes. The M1 Finance Plus platform, this has been out for I think a week or two now. The M1 Plus, they are giving you an opportunity to purchase not only in the morning but also in the afternoon. That is new. I will continue to be buying at that 10 a.m. time frame. It's more or less around like 11 o'clock. I used to do day trading, and if you want volatility, you trade, or if you're trading, volatility is kind of how you make the money for day trading, is you want to be trading within that first hour and a half. You do not want to be buying and holding after 10:30 in the morning, because all the volume's pretty much done for the day, unless if there's some late afternoon news that happens, which M1 Finance luckily does. They buy, it says 10 a.m., it's closer to 11:30 when the market's pretty much settled down. So whether the stocks have gone up or down for that particular day in that couple hours, it settles. All the day traders go away for lunch. Everybody usually breaks for lunch at 11:30, and then they come back. So buying at that time is great because the volatility is pretty much out. You're buying, where it's going to end up for the most part for the day. And that's just kind of baked into M1 Finance's purchasing. Now, if I would not want that, if they change this to, we're going to buy when the market's open, 9:30 every morning, I would not want that. I would actually probably sign up for the M1 Plus and then just try to target afternoon purchases instead. I would not want to buy during peak volatility. But right now, I'm still happy with the way M1 Finance is handling everything. So that'll be it for this video. Stay tuned for next week. We'll give you another update. Like I said, I'm going to be contributing a little bit more money. The account is getting up there. I'm still heading in a positive direction. I am happy with the way everything has been performing. Just to give you a little bit more research, if I had done this Unfortunately, it can only go back to October 30th. So if we just look at a 1-year calendar view, if I had contributed that 2,500 right off the bat, I would be sitting up over 16% with about a 3.8 yield on my 88 holdings. That is pretty darn good. It's extremely low volatility. Everybody took a huge drop. This was like probably a 10% drop, if not more, for the overall markets. But with the way I have everything weighted, you see it's $100 here. The bottom was 96. So when the rest of the market was down 10, 12%, my volatility, I dropped 4%. And then I still rallied up, right past everything. So very happy with the way the previous performance and the live 6-month performance that I've had. I'm still very happy with the way everything is going. So until next time, I will see you then.